The video opens with a clear explanation of what makes an effective stashaway portfolio. Begin by stating that the right setup balances long-term stability, consistent growth, and resilience across economic cycles. Emphasize that stashaway's strength lies in its ERAA framework, which automatically adjusts asset allocation based on macroeconomic conditions, but the investor's selected risk index still determines overall exposure. Highlight that selecting a portfolio is not about chasing short-term returns but creating a structure that performs reliably across expansion, recession, inflation, and recovery phases. Move directly into defining an ideal setup. Start with a diversified risk index between 20% and 36% for most long-term investors. This range provides a strong blend of equities, bonds, and alternative assets. Explain that higher risk indexes lean heavily into global equities, while moderate levels maintain a healthier bond cushion that protects capital during volatility. Reinforce that the best setup favors global diversification across U.S., European, and emerging markets rather than concentrating on any single region. Detail the importance of steady contributions. Show how automated monthly deposits, even as low as $50, compound powerfully over time. Emphasize that consistency beats timing, and stashaway's automated rebalancing ensures every contribution aligns with the target risk level. Highlight that depositing in dollars helps investors better track performance across international assets and protects long-term value. Explain the need for a dedicated cash management or low-risk portfolio alongside the main growth portfolio. This functions as a liquidity reserve for opportunities or emergencies without disrupting long-term investments. Stress that separating short-term funds from growth capital prevents emotional withdrawals during market swings. Transition into reminding viewers to enable auto-reoptimization so the portfolio updates with economic changes. This keeps allocations efficient without manual adjustments. Close by reaffirming that the best stashaway setup combines a moderate risk index, global diversification, consistent dollar-based contributions, a stable liquidity buffer, and trust in the automated system. This structure delivers strong long-term performance with minimal effort.